Morning, everybody. Welcome to the Flow Show. It's Tuesday and got a day ahead of us, I think, going on with some of these price moves. Let me get my screen sharing up and running.
Good morning.
Morning, Stel. Morning, Kay. You doing all right?
Very well, thank you. Kay, I bet Kay's doing well. He's one day away from going back home.
Hours, yeah.
Hours, oh, even better.
No, yeah, a day away, but hours before preparing the departure.
Nice.
Very nice. Yeah, weather's going to be nice over there, from what I can see.
Yeah, it's from what we could see, it's going to be okay. Although temperature seems to be a bit lower than we might have expected, but that's all right. At least it's not going to pour down, I guess. I trust.
Yeah, I hope not. I hope not. Right, well, let's get cracking into it then. A few things to go over, some things to highlight. China, according to several Chinese media mouthpieces, let's call them, say that the LPR rate is likely to be kept unchanged for some time. So no interest in moving those, it seems, for now. Over to the yuan, and we're having another little rally up towards the highs in dollar China, and the PBOC set its midpoint at 7.0326. That was quite a way up from 7.0157 yesterday. So they're giving it a free rein still as far as further upside moves are going on there. Looks like we might be having another look at the highs there and maybe a push higher, but we'll look at that in more detail in a bit later. Tons of data out today, yesterday, and starting with Eurozone consumer confidence yesterday, which was a usual chipper minus 17.4, so not as good as expected. Expected up to minus 17, and only a pip better than the prior month. Again, this indicator is it's my first favorite indicator. It was my second after the Canadian ADP report, which was a complete joke, but this is back to be my most impressive data point, favorite, because it's been positive about 4 times in its entire history, as far as Eurozone consumers are concerned. That's probably reflected with you, Stel, isn't it?
We're a sad bunch, aren't we? A miserable bunch, yeah.
They call us miserable over here in the UK. Well, Eurozone lot, terrible.
How long has it been going for? How this number? How far back does it go?
Oh, it's been going for a good long while. Let's have a look. Look at the chart.
Because I know from the 2012 onwards, we started to have the Eurozone crisis and all that. So, wow.
Yeah.
Now it goes further back. What the hell is that? Seriously?
I think that might be extrapolated data or something else going back there. But yeah, you can see it's literally 4 times its entire history has it been positive. Unbelievable. It's hilarious. Love it.
Yeah.
Anyway, moving on to some other data, and obviously it's PMI day today around the globe. We're seeing more divergences in other countries between services and manufacturing. Australia giving us good results in both, though unchanged on the month prior. Jump in services, really decent numbers in Japan, moving into expansion in manufacturing. Services, I think at the highest for quite some time. And there's some inflation data, BOJ core CPI coming in hotter than expected at 3%. So keeping what we've seen from there in play as far as inflation goes. Over to France, manufacturing improving a tiny bit, services going the other way. So France bucking the trend there, as we're seeing in some of the other countries. Germany, good response there. Well, on services at least, manufacturing going the other way. Services 57.8, beating the 55.5 expected up on last month. But manufacturing going further into the negative. The pan-Eurozone number pretty much doing the same thing, although services did slip back a tiny bit. The UK, same picture, worse manufacturing and worse services by a few pips. So a little bit of flattening going on in there. So overall, the data so far, some things you might call impressive, like Japan. Other things are a bit sort of meh across the board. Probably par for the course in what we've seen from the economic data. Up and down thus far this year. And as we've been saying, that's what's going to be expected for growth probably for this year. We get a good month, we get a bad month. We get a good month, we get a bad month. It's only if we really start to see some real trending lower that it might get a bit worse. And I think if the sectors were switched around, if we were seeing poor services and better manufacturing, that would be worse for economies, because services are gaining as the biggest component in a lot of countries now, manufacturing falling by the wayside in a lot. So it gives some opinion for that we could see at least things going a bit better, but not breaking any records over that. Coming across to the ECB, and Wojcik said, a strong European tourist season to feed inflation. Hands up if you're all running into the Europe or the Eurozone for your holidays this year, because apparently you'll be adding to the economy over there. So, Kay, you got your wallet ready?
Sorry, mate. I was just reading something. What did you say?
I was going about Wojcik saying a strong European tourist season will feed inflation. So have you got your wallet?
Yeah, if you take the next week and a half retail sales, they should be coming in a bit better. Also on services, restaurant and activity should be spiking in the next week and a half. But then everything back to normal.
Yeah, then it'll dip off. So we'll also probably see Belgian consumer confidence rising next month as well.
We'll see.
ECB's always says rate hikes may take longer to hit the economy than in the past. How long we maintain high rates is now more important than the precise terminal level. Rates are expected to reach a peak no later than September. And sitting on the fence, he said we could hike or pause in the next 3 meetings. ECB's De Kos says there's still some way to go to tighten monetary policy. Coming over to the Fed, and Kashkari says the Fed has to keep going on fighting inflation. It's a close call on the June meeting whether to raise or pause. Services inflation seems pretty darn entrenched. Sounding like Brand there. I was above 5 1/8% on the previous September dots, but it may be that we have to go north of 6%, but it's not clear. Our mate Bully Bullard, usual hawkish self, said the Fed will have to go higher on the policy rate, perhaps 50 pips more hiking this year. He's expecting 2 more rate hikes this year. Core measures of inflation have not changed in recent months. If inflation is not controlled, the Fed will have to do a lot more, and they should err on the side of doing more. Bullard's probably got the top dot on the current dot plot at the moment. He seems that he still wants rates to go that high. Fed's Daily first came out and said it wouldn't be right to comment on monetary policy, but did give us some bits and pieces on credit tightening, saying unsure how deep and long credit tightening will be. The global tightening cycle has slowed activity less than expected. She sees house price inflation coming down through the year end. Fed's Bostic being a bit more cautious, saying that the Fed has done a lot of tightening and that policy acts with a lag, and is comfortable waiting a bit to see how things play out. Over to the debt mess. There were some comments coming out from all the players going into the meeting yesterday. House Speaker McCarthy went in saying we don't have a deal, and that the negotiators meeting was productive yesterday morning. Says he thinks he can make it all happen by the debt deadline, and the current debt ceiling package being negotiated would be acceptable to a majority of House Republicans. Biden said he was optimistic they will make some progress on the debt ceiling at last night's meeting. So then that happened, and the comments came out after, and McCarthy said that they don't have an agreement yet. The problem is spending, not revenue. The tone of the conversation was better than any other previous time. He was asked on whether Americans should prepare for a default, and he replied no. They also said doesn't think a short-term extension benefits anybody. So maybe a bit better, more positive slightly in the comments from McCarthy coming out of that meeting. However, another US Republican representative, McHenry, said he didn't sense any alignment between Biden and McCarthy at the meeting. Biden himself came out and said that it was a productive meeting about the need to prevent a default. So hard to pick anything through those bones, but maybe you could say it's a bit more positive. Maybe they are going to work towards not getting to the default red line, and maybe they won't do a short-term can kick, and the can kick will be longer. That will be the most positive outcome for it. We're probably not going to see the market moving significantly until we get a confirmation. But we just have to keep an eye on the tennis games and the further negotiations as they roll on towards the June deadline. Now, if you're trading oil, the Saudi energy minister came out telling speculators to watch out. They said that he's warned, this was Saudi's Prince Abdulaziz, said he's warning speculators they will be ouching again as they did in April. He said he's not a poker player, but he will not be showing his cards to anyone. So you'll remember the little pop we got in oil back in April, that little gap up that we saw. Where's it gone? Let's go on a different chart, and we might be able to see it. So you remember that move there that came at the beginning of April, which was on surprise production moves there. So maybe there's something coming in the pipe again regarding that. Not that the market's front running it at all on those headlines. It's barely budged, but we shall see. That pop has obviously didn't last long. So maybe the market's going to hit anything like that again. So, but just keep an eye in case we get a headline drop. If you're trading oil, you know what it's likely to be. That's all I have on the headline front at the moment. Oh, we did have Bailey out just not so long ago as well, saying that inflation has likely turned the corner. He's speaking in Parliament right now, explaining away the monetary policy report at the last meeting. So that comment on inflation may be a little bit of a heads up for UK inflation tomorrow. Headline inflation is expected to drop to 8.2%. from 10.1% previously on the headline number, but stay unchanged on the core. So as I say, maybe a little heads up that we're going to get that number confirmed or thereabouts tomorrow. We shall see if he's leaked us the data. You guys got any comments you want to chuck in?
You covered the headlines. Just want to say about UK inflation that you mentioned now. We are getting to the point now where we're dropping off months of very high inflation and adding in months of low inflation. That's why we're going to see this drop in the year on year from, 9 point something to 8 points. I mean, it's going to drop by a percentage point or more. And I think that's going to be the case for the USCPI as well. It's slowly going to be getting, I'm not going to say towards target, but I think we're going to see more progress. And Bailey wouldn't be saying this if he didn't know what the number is, right? I mean, I think we can all agree on that. Inflation dropping, that's going to be a theme going forward. I mean, it has already been dropping in the US, a bit more stubborn in the UK and in the Eurozone, but it's going to be dropping. The question is, what do the central banks do? How far ahead do they tell us that they are looking? If they are looking enough in the future, like the Bank of England usually say, we look at a 2-year horizon and we want the inflation to be at or near our target by that time. They can easily say, yeah, we've done enough. I'm actually surprised by the Fed because, of course, it's the hawks who keep saying this, right? Like Bullard and Kashkari saying we might need to get to 6%. I'm actually surprised that there are still members of the Fed which are hawkish because the trend is still for inflation to go lower, and theoretically they should be happy with it the way it's going. But it's good to see that there are hawks around, because you definitely can't be complacent. It's not job is not done, and if anything, the job should be done when we get minus 3% inflation. So but that's not going to happen. So inflation is interesting. It is still driving central bank policy, so basically driving all markets. And I'm going to repeat what I've said before. I think employment is of a much lesser importance at the moment, simply because it has been pretty stable and pretty good over the past, COVID excluded, because that was a one-off thing. Over the past 10 years or so, employment has been, pretty good. So let's see what happens. We do get core PCE on Friday, which is going to be important. And and the debt ceiling, oh man, I don't want to start on that. They're going to find out some kind of solution. Is there going to be like Mike says, 4-month kick the can? Yeah, could very well do that. But come on, who are they kidding?
Yeah, exactly. We could still get a short-term can kick, but who knows? We're going to get this table tennis coming out for much longer. Kay, got anything you want to inject?
No, absolutely not. I think you covered everything. On the UK inflation, there was some survey out from the FT saying that the Brits are still expecting their inflation to remain among the highest of the peers and coming off slower than the rest. I think the only one where they expected their own inflation to be stickier than the UK are the Swedes. But then, so the survey says that UK consumers or firms are expecting the UK CPI to be stickier. But then what Bailey said this morning was really a repeat in perhaps less disguised words of what he said on the latest Bank of England press conference, where he says we expect CPI to come back down, and now we're expecting a nearly 2% drop tomorrow. So if we get what is expected, then I don't think we should really be surprised, right? But that's about it, mate. Nothing else than geopolitics and the debt ceiling. For the rest, it's pretty slow going, but we have to note that US yields in general, but US yields, who are the main drivers, of course, they stay very high right now. We have kept the what are you on the we have kept the 423.25 zone on the 2s, and we're keeping the 63.65 on the 10s, and that is likely keeping the dollar supported. I don't really know why the Aussie dollar got hit on the head overnight or early in the morning, but good for you. Kiwi tomorrow, the RBNZ is going to be a tough one because there's probably as many reasons to be hawkish as dovish. The first reason for not to be as hawkish than the last time was the Kiwi CPI coming back down within the Bank of RBNZ's target zone. It went down to 2.8%. Their target zone is 2 to 3, of course, still at the high end of their target zone. But then there's other reasons. The budget came out last week, and as one of our friends in the chat room said, the budget was seen as inflationary, so that will keep ore on the hawkish side, which is correct. And then the housing market is still not overheating too much, so that may be another reason to keep on hiking as there's still room. But all right, we in theory they're above the inflation, so I don't know. It's really going to be a flip the coin, that one, tomorrow. I reckon it's and it's coming out during the Asian hours as well. So
Yeah.
another reason why to be a bit careful with the RBNZ tomorrow. It can be a mover. So if you got New Zealand dollar in position, be a bit careful for what's to come.
Yeah, I mean, the rate probabilities are 50-50 over whether they go 25 or 50. But do you think there's a chance they could go on pause? I know one of the guys in our room was asking that.
Honestly, I mean, for me, there was a reason. There is a reason to go on pause, but then there is enough reason to go 25. I mean, I don't know why the market is still expecting 50. 50 would be uber hawkish. I don't know why really, but ore has been a weather vane, right? At the end of last year, it was nearly done. It was all a bit mellow and stuff, and then start of this year, it goes all hawkish again. So acting like he does, it's perhaps dangerous to have anything in Kiwi position going into the meeting. To me, it's likely a 25. That's my base case, but because I don't see too much of a reason to go 50, but I would not completely rule out a pause, but right. I mean, I'd say personally, it's 80-85% at 25 BPs. That's my expectation.
Yeah. Yeah, good stuff, mate. Thank you very much. And we'll let you have a look at the prices in a little later regarding the Kiwi. Just want to answer Ali's question here, saying, are speculators gamblers, and what's the difference between a trader and a speculator? Talking about the Saudi stuff. Speculators, we're speculators, really. You obviously get institutional speculators, us retailers are speculators, really. The difference between a trader and a gambler is defined two ways. One, if you're a trader who trades on, I think this is going to do this, or this price has moved 200 pips, so I'm going to trade the other way. That's gambling. Not putting stop losses in, that's gambling. What traders do is, certainly myself, and I know a lot of the guys here, Stel and Kay as well, is you manage your risk. You know what you're prepared to lose. You're not guessing. You're not going to put a trade on and then if it goes offside, worry about what to do with it then. And meanwhile, it's 200 pips offside or something and you don't know what to do. That's gambling, okay? Trading is gambling. You're making a 50-50 bet, basically, but you're limiting your risk and you're managing your trade. And you're saying, right, if I am wrong, I'm only going to lose X amount. And if I'm trading against the market or against sentiment, then I'm going to manage my position. Thus, I'm going to do a smaller position, a tighter stop or whatever. And that sort of thing defines us from gamblers. I like a bet, okay? I like a bet on the football. As you may know, I'm a West Ham supporter. I've made more money betting against West Ham than I have betting for West Ham to win, because I know my market. I know my team. I bet with my head, not with my heart. So in that aspect, that's similar to trading. You know, I don't trade. I think I don't go into a game thinking, oh, I want my team to win, so I'm going to bet on them to win. I look at the odds and I think, well, if we come unstuck, as we quite often do, and this season is a perfect example of that, where we've finished well down in the league and not won many games, you make more money betting against them. That is my trading head thinking about what I'm going to bet on and how I'm going to bet, looking at my market. So yeah, it's hard not to be a gambler when you're doing this game. There's plenty of people who do see it as gambling, but it's the work you put into it not to lose that defines you differently from a gambler and makes you a trader. So yeah, you've got good principles. They're the ones to follow. Okay.
Yeah, if I may say, Angela put some really good words in there. Just the informed intuition. That is indeed a very good description for the start of your trade, and then but then management of your trade comes in a second or in a third part. First is the preparation, and then making a making a decision as to where one thinks things will go. But I like the informed intuition description. That's a good description for a part of trading. And of course, there's a part of gambling in there because we don't know what may happen the next 5 minutes. There's somebody may break a leg, or there may be like some really bad examples of the past few years we had with COVID and Ukraine. So there's always going to be a part of unknown, but that's where your management comes in. So I wouldn't call us gamblers, to be honest. I think we're a bit better than that.
Yeah, exactly. That's the way.
Speak for yourself. I'm a gambler. No, I'm kidding. By the way, one of my best bets.
You're
Go on.
Tell you've been a gambler when you bought your tires for your car.
Yeah.
And you lost.
By the way, one of the best bets I've ever made was against Greece after 2004, after we won the football. The odds for us were really good for anything we did. So I'm like, yep, that was it. And I did well.
Exactly. So you bet with your head, not with your heart, and it's the same with trading. You trade with your head, not with your heart, and hopefully you win more than you lose. That's the way to go about it.
I still remember the game, Greece, South Korea. We lost 2-0, and I was on a beach listening to everybody going, "Oh no, they scored another one." I was quietly celebrating. Anyway,
it's always a good emotional hedge as well. If I go to a football match and we lose, I'll come out with a hump. But if I've made a bit of money for a few beers, it's not so bad. But I'm happy to lose that money if we get the win. That's the main thing. Just like trading, I'm happy to lose what I stake in trading because I'm in control of it and I'm managing it. And anyway, that's a good subject to talk about. And Brand's coming up. See, talking about trading psychology and everything. There's a man who has been with us for a few years now, and I've seen him make every doofus mistake there is. And over the years, he's learned, he's put the work in. And hello.
This meeting is being recorded.
We can hear you.
It just lost you all for a second.
We lost the screen. We lost the screen, and we lost you for a second.
There we go. All good?
Yes.
Cool. Yeah. I was just saying. So yeah, Brand did very well getting out the noob rut. Still a lot of work to do, as he knows, but he's on the right path anyway. Right. So let's have a quick look at the prices. I was talking about dollar China, which, as you can see, is mooching on up. I've just taken a little snip off my long in the 706s. If we get above this high, I think we could be on for a run to 709. It's got a little bit of an area here up to that fib. 609s, 612s, you can probably call it. So a bit of a traffic zone there. If we get above there and start heading up maybe toward the 720s, I think that's potentially when we'll start to get maybe some stronger jawboning from officials in China. Depends on the speed that runs up there. But for now, as we know, they are giving it a little bit of a green light. So they're happy to let it wander for now until it does. Kay, you still holding in this one?
No, I went out the other day, but I mean, full disclosure, this morning it's a quick step because I don't want to keep it while I'm away. I bought some back, but I mean, it's just really to grab if I can get 100 point of 75 points on a part, it's fine. It's I just went back into it just because it's holding around that 701, 702, and then see what's going on. I've already been letting some go because I'm like up 70, 80 points, but the direction is still there. The direction is still there. But personally, I'm not gonna hold it. I could just hold it and put a stop below 7, but I don't know what's going to happen really with the dollar. I mean, for the time being, it's still a yields, very much a yields thing as well. And then there's a bit of geopolitics in the CNH keeping it under the cush. or trade. Let's put it that way. We're back to trade. Yeah, but you're right. I think this can go to 712 right now, and then reassess. You know, there's a few dollar pairs who are coming into interesting levels again. Euro dollar, cable, Aussie.
Yep.
It's all happening again, and we're getting. Yeah, the dollar yen is still holding the break. But I can have a look at stuff a bit later.
Yeah, have a look at the moment. I would have liked this one to have held a bit cleaner around this 702, 703s.
Yeah.
But I think if I see you move back down here and we hold it just above 703s, I might add back into my longs and see if we get that kicker up. What I'd like it to do is just make, even if it nicks a new high up at, 708 before having a little pullback. That'll tell me that we aren't making a top just yet. If we hold around this high and then pull back, that might suggest there's a bit of a line up here. Someone's interested in not letting it go too far, and that could mean we get a bit of a steeper pullback. But for me, I'm going to watch this high and watch it into this 703. As I say, I'd like it to nick a new high, then come back down and reload onto that one. I think. Looking at euro dollar, I'll let Kay get into it in a bit more detail. I'm looking at this 760 area, which held quite well the other day, last week. We are perhaps coming back a bit too quickly, but if we do hold there, that might be worth a little bit of just a little scalp off the level. If we're below 107.50, I think we're probably going to be heading down towards the big 7 level, which is a much bigger level that I've been interested in. We've been talking for several weeks, particularly about this second leg, the move up to 111. Was it holding? It's not holding. So that does suggest we might get a steeper pullback. We've got a ways to go yet before we even test it. I've taken it off just because it wasn't, I had too many fibs on there. If we take this fib up to there, we've got a bit of way till we even look at testing that. I think it's down in the 105s, 104s perhaps, before we test a wider trend. But so far, the second leg is definitely being tested below that 50 fib. 61.8 is the last one to go. And then I think we have a look at that 7 number. So that's where I'll be looking at, maybe trying to catch the knife, get the old butcher's gloves on, as we call it. Dollar yen had a new high, fresh high today. We've also seen, well, everyone's calling it profit taking in the Nikkei. Is that what it is, Kay, or what's been going on over there? I mean, it was good data last night.
Yeah, but I don't know what that there was something in there was I put it in the room what it was. Let me find
that
it.
Auction, wasn't it?
There was an auction, and then all of a sudden, right after the auction, the Nikkei dipped. So I guess it may have had something to do with it, because the auction was quite oversubscribed, and that may have hit the Nikkei. But then there was other stuff apparently going on about the Chinese diving into Japanese stocks and things, and it's probably somebody hit the button just at the same time, taking profit, and that accelerated the whole thing. It was a bit of a sudden move, but I didn't see much else to justify this. In the meantime, we are still pretty much holding the pattern. And if you look at the futures, where are the futures? Yeah, they're still a bit sluggish compared to yesterday. Yeah, we are actually turning around the lows of the session. Yeah, I don't have much more explanation than that.
And it seems that dollar yen's probably watching that, moving on that at the moment, as well as you, because yields are higher, as we can see, but dollar yen isn't back up towards, isn't keeping those highs. It's come off. So it looks like we've got a bit of, as we can see, general yen moves going on here. A bit of a pullback in yen pairs, which seems to be dragging dollar yen with it. So this move, even though we're seeing dollar strength in some of the majors, it's not solely dollar strength. It looks a bit more yen led. Maybe following those moves in the stock market.
Yeah.
So for me, we've made a new high, even though it's by a few pips. We've made a new high. It keeps the move going. We're holding well above, or looking to hold well above this 138 level now. That was my marker for a test. If we do get a test of that and it holds, I may consider a little bit of a little scalp long, just to see if we continue up. For my shorts, my long held shorts, I'm looking, staring death in the face, as we say. I've got a 139.50 stop. That'll be me done, dusted, bury it in the ground, and see what else is going on for that one. But yeah, just going to play the price action in this one probably. And Kiwi, still in my shorts from the 68s, looking for a move down to
Aussie.
Big figure.
Aussie.
Is what, sorry?
Aussie, you mean?
Yeah, Aussie. What did I say?
Kiwi.
You said
Kiwi.
Kiwi.
Oh, God. Kiwi on the brain. See, that's what talking about currency does to you. So Aussie shorts from 68. That Kiwi would have been nice from 68, but yeah. So I'm going to look at the 66 handle, take a bit off there, and see if we hold or get a move down. If we do, we've got some decent levels coming in underneath. Down. Let's get those up. So coming in a little lower, around about the 65, 80s, bit of an area down there, been a former support point, and then, but really the big zone's going to be just under there, from sort of 60s, 70s all the way down to 65 and a half, that sort of area, down towards that fib as well. Kate, do you want to take a little mooch around the grounds, and Stel, you're going to show us your magic tomorrow, aren't you?
Well, I wouldn't call it magic, but yeah, I'm going to show some charts. Dollar Norway is getting to really interesting levels again.
Yeah, again.
Apart from the 2020 COVID week of panic, we're going to be at all-time highs now, pretty much.
Yeah.
Anyway.
Yeah, I'll have a look at the Norwegian kroner. It's quite spectacular, I must say. If it's really founded, yeah, Norges Bank is still selling Norwegian kroner every day, and I reckon that's the biggest. That is the biggest reason why it's just continuing to go, because oil has been relatively, give and take a few percent, stable, right? All right, quick look at the yields. Okay, so now we are as I was showing here, this 423.26 zone we are through on the 2 years, and that's really what's keeping the dollar bit. I think there's more model funds and people trading on the back of yields than anything else right now. But for as long as they are continuing to push, it's hard to stand in front of the dollar, right? And on the 10s, this is what I meant here, the 460, 364, 365, we retested, and then we are continuing to move higher. Dale was talking about this 390 as well on the 10-year. We could be heading there, you know, before the party is over. For as long as it continues to tick up the way it does, it's really very hard to stand in front of the dollar. Even on if you look at the short-term differentials, this is the euro versus the dollar. We are trying to move out of this support zone that we had, get a confirmation through 152, 153 BPs. Euro dollar could continue to be heavy until we get to the next few BPs. So yeah, keep an eye on those differentials to judge whether the euro dollar has further to go or not. And then on the euro dollar, we are really trying to break below, but as I said, it looks more like a sort of a kind of technical break on the back of those differentials. Must say as well that the European PMIs were a bit of a mixed bag, so there may be also a little bit of fundamental reason why the euro would go and test at least low 107s, call it 107.30. And for me, the big area here will be 105, 105. If ever this gets tested while I'm away, this is probably worth keeping a very close eye on what's happening here in the euro dollar if we would go there. For the euro really to start spiking again, we need to overcome already 108.50-55, and it's for the time being not even reaching above 30. And then here this trend line, then if developments take the dollar to the other side, keep an eye on what's going to happen around the 2030, 2040, 109, 2030, 2040 zone, okay? On the yen, well, perhaps quick look on the sterling. It's tried to get back in there, but it failed, and now we seem to be, and especially also if the market expects those CPI data to come off and reprice perhaps a bit of Bank of England, whether it be justified or not, just the fact of repricing or hedging activities can take the cable back to 123.20. Why not 123, the figure, a test down there, okay? Therefore, we need to get below those prior lows here, around 123.60, 55. We had a couple of lows here. If it breaks back down there, then we might have a quick run down to the low 123s, 123, the figure. For the short term, for the more medium term, I'd say, as I was saying already a couple of times, the 122.75 to 122.60 is possibly the new 117.60, 117.80, but possibly. We will have to, the jury is out, okay? So we first have to get down there and then see what the reaction would be down there. Dollar yen is just holding this break. We haven't even retested it yet. We have retested once and it really bounced. That was yesterday, very early morning. Today we set in a bit of a new high. You could try to put another trend line here and say like, okay, we went for a test and it held there. Okay, this could now be a new mini channel, possibly. So for the dollar yen to start to reverse, we are going to have to get back below 137.70 and especially 137.5. Okay, then if it goes back down and you get a confirmation through 137, then the party is probably over. For as long as that holds, though, it's tough to fight, and basically you just watch yields and probably Nikkei right now. Speculation about the Bank of Japan will come a lot later, but we have to. The Japanese have started to follow a bit, but that's really in sympathy with the rest of the yields. If you look at the UK yields are trading higher, Canadian yields are trading higher, Aussie yields, all yields are actually trading higher. So it's a bit normal to see this one creep up. But I reckon that only ahead of the Bank of Japan, we are going to see this one push again to the 50 BPs mark in a bit of speculation in regards to the Bank of Japan. Yeah, Aussie, Ryan already spoke about it. 66, 60, 65 is still the resistance. We went into the zone, and now we are getting back there down to 66. But Ryan has already spoken about that one. Kiwi into the RBNZ. Okay. Kiwi dollar might be a bit of a difficult one, perhaps, if RBNZ decides to go a bit hawkish, then the long dollar play will be a bit dangerous, perhaps. But anyway, we are in a bit of a channel here, or a flag here. Could be a bear flag as well, developing. If you get back under 62.25, then we should be in for a retest of those 60 or the 61.85 figure zone, which is a bit like your 124.40 15 cable, an obliged stop or station before deciding about anything else in the Kiwi. If in turn we start to break above 63.10, then Kiwi should shoot. But again, it's perhaps better to look at what's happening in the Aussie Kiwi. The Aussie Kiwi here has now broken, retested the 106 overnight, and was capped. So we're trading still very close to the level. So that may be an interesting one to keep an eye on for the RBNZ. If we start to move higher again, we could be in for a move back to 106.75, 107.10. But if we start really to cap this, there is very little to me that is going to hold it back from retesting 104.70 is the other the low that we saw back in December. So that for the RBNZ, perhaps the Aussie Kiwis might be your cleaner pair to play the Aussie, play the Kiwi over the RBNZ. Sorry. Canada, I have no idea. Yeah, Euro Aussie has already mentioned by people in the room as well, is still holding the 162. Still holding the 162. The trend line has been broken a little bit, but as we know, when trend lines come to the market, their importance is less. So it held the 162 again. On the top side, 163, 50.65 is going to be your first measure point. For the time being, 163 is already capping it. So this is about 100, 150 points. Sorry about it. To play inside right now. Mind you, Aussie could be dragged around with the Kiwi a little bit. So this Euro Aussie may be on the move, even on the Kiwi RBNZ rate decision next night. So, but for as long as 162, 61.95, 62 holds here, it's still pretty much bullish to me. Metals, because they are in a bit of a pickle. Gold. We've got a couple of levels here. We are somewhere retesting the 18th of May lows right now. Got a little bit of a few more levels in the 50s, but I think this trend line, it broke pretty violently. We came to retest even when a little bit below on a short-term stop run, but since then we've been above. So I think in the low 1920s is an area where you should pay attention. And if that would go, then it's 1900. 1900 seems to be an interesting enough zone for me here in gold to keep a very close eye on. Silver broke as well. We had this first test the other day, but we did hold the fib line here. But today we are through, and looking heavy for as long as those US yields, and they're still pushing on, for as long as those US yields keep on pushing, this is probably also going to be a bit heavy. 22.25 could be seen here, and then I think the big one which should hold or bad news is around 21. I'm lined up to add a little bit around 22 and then a bit more around 21. I still want to keep my long-term position going, as I've been saying many times. It's smaller right now, so I still have room to add if we get down here at some stage, or perhaps for it to go back higher, we need to break back above this trend line here, which is around 24, 35, 40, call it today, but it's going to come a little bit lower, and then you can add your Trump zone at 24.65. If that goes, then it's probably done with the correction or downward move, and we're probably going to shoot. EuroCAD been asked. Well, for as long as it's below this 146 1540 zone, it should remain on the defensive. But then we're having trouble in making and staying low as well. I think your oils are playing a bit with this one. So you should, for the short term, you should get back under this 60.75 zone to start to move lower again. But if you see it move back above 146.20.40, there may be some needing to run for the exit, and it could move higher again. So I don't have any conclusive opinion about this one right here and now. It's even, it looks like very consolidation, right? Around here. No, I'm not going to make any predictions in this one, to be fair. What else? Anybody else? Looks like flagging for higher. Is that the okay, you could say if it puts in a low here, if you consider this one that's been broken and then flagging. Yeah, I think it's more of a consolidation than anything else. Right, anything else you wanted to look at before I give it back? Oh yeah, I was going to have a look at the Norwegian krone. This is still looking monsterly strong, even though we are not yet at those prior highs from where we had a retest of the bottom end of the channel, but it's still looking extremely big, right? So I'm not going to run against it right here and now, although as some people say, we are getting into very interesting levels. Perhaps this one a little bit less than the dollar Norway. The dollar Norway could be getting getting extremely close to the prior top here, just above 11. So that's a very interesting one. Although we have to acknowledge that we broke above this trend line, retested it in the 1080s, and then start to move again. So at your risk to counter trade this, the 127.2 is at 11.04 3/4, 11.05. So if you want to counter trade this, and I know some people are very eager to counter trade this, if I would have been on the desk for the next week and a half, I may perhaps do the same, try it short at 11, but I wouldn't really like it if it goes back above 11.05, right? I would not like it. I wouldn't like it, because then it is possible that we are going to retest higher retracements from the post COVID spike, and then the move back lower, and that's around 11.28. So yeah, you can give it a go. You can give it a try up to 11.05 or something like that if you really want it. And Euromex, it's correcting, and as I said, I mean, it was a bit of my expectation that we could be correcting. I've started to put some orders in for when I leave, because I still think that it's very hard, despite the fact that Mexico was less hawkish, it's still going to be hard to be short for long in an 11% currency. So I am going to try to see if that pair respects the downward, the very strong downward channels still. And that is, oh yeah, for those who are watching dollar rand, we are stabilizing. This looks a bit too fragile to me. We are stabilizing. We had this little dip below 1920 here again this morning. Trying to stabilizing this. I still think the way is up there, but as already discussed, we have to respect the 1950 because that's going to be really your gateway to move up into the 1175, possibly 20 the figure zone here. If it breaks below 1896, it's going to be a first sign that the party may be over. If it breaks below 1870-80, then we're probably in for a real reversal. But for the time being, I don't see it happen. But I'm managing my risk, and I already managed my risk a little bit on this one. And with that, I'm giving it back to you, Ryan.
Thank you very much, mate.
And I see you all in a week and a half time. Thank you, guys.
Yeah, cheers, Kay. Just before we disappear, just a quick question, and I got asked in our chat room earlier today about the relationship of yen and Swiss to risk at the moment, because they obviously are seen as a risk off, risk on currency in that. Right now, though, I think a lot of that correlation is a bit up in the air because of everything that's going on. You know, there's risk on, risk off from the US, there's risk on, risk off from the Ukraine stuff and everything else that's going on. So I think that the straightforward risk on, risk off for the Swissy and the yen is a little bit broken at the moment, particularly for the Swissy, which I have no idea what's going on there. We know the SNB is heavily involved in that, both sides of the coin. So that makes it a bit difficult to trade. What do you say about the yen at the moment as the straightforward risk currency?
I've already spoken about that a couple of times, and I think that in a higher rate environment with a bit more volatility, higher yield environment, and with the new governor, I do expect the correlation, the relation between yen and risk to start to come back. And I think we already seen a part of it, because if you see a Nikkei being much higher, the rest of the equity markets holding up. I know it's not holding 4,200 on the S&P right now, but it's still much higher than where we may have expected it to be, or other market participants who are very risk averse. So if risk is doing better, and then higher yields, more volatility in yields, I'd say this correlation is actually, and perhaps after the debt ceiling is done and dusted, I do expect the correlation with risk to come back a bit more, especially if and when Bank of Japan will start normalizing. As for the Swiss, it's really SNB combating, fighting inflation, right? And they've been so open about it. I think they're constantly weighing on it. You can't. I'm really waiting until they say, we're all right with inflation where it is now. And then I think that's a green light to sell Swiss franc, because then they will stop buying Swiss franc. We've seen the reserves come down, and that's typically they're selling foreign currencies. And talking about people having gone to jail for manipulation, they are just openly doing it, and not even feeling ashamed about it. But for as long as they're in there, I think it's not that you can't be short Swiss franc, because you can do dollar Swiss or whatever. But Euro Swiss is just, to me personally, a waste of time to try to counter it right now. It's going to go up 50, 60 points, but then they smack it down again, the same 50, 60 points. It's a bit unlogic to be here in Euro Swiss with where the rest of rates and risk is. So that's typically down to the S&P. But there will be a time where we can sell Swiss.
Yeah. Stel, you got any thoughts on the risk plays between yen and Swissy? Are you seeing them coming back to normal, or
well, Swissy is just I haven't traded the Swissy in years, and I'm not joking, because of the one big force moving it around, which is the SNB. The yen, I want to get long yen, so I want to get short, dollar yen euro yen, all the yen pairs, because I do think that the BOJ, I know it sounds crazy to say it, but I think the BOJ eventually will be tilting a little bit more to, I don't want to say hawkish, but less, you know, ultra dovish. And so I want to sell yen pairs. The question is where, you know, the thing is, the problem is that technically, you know, dollar yen is still looking, it doesn't look weak. You know, same with the guppy. It's broken a resistance trend line. It's heading, actually it's at those highs from 2022, from October last year. So it's difficult to get short something that doesn't show technically potential to go to reverse. Same with euro yen. Euro yen is at this level, which is a I'm going to show that tomorrow. Actually, it's an area of interest going back to 2014. So it's difficult. I want to short yen pairs, but not yet. I'm patient. I'm going to eventually do that. And same with dollar Norway. Same with euro Norway. But I'm gonna bide my time for now.
Cool. Thanks, mate. Right, we'll call that a wrap. We've been longer than an hour. See what you get. This is all free for you guys and girls. Come and check us out. Thank you very much for coming to the Flow Show. Kay, have a great holiday, and we'll see when we get back. And cheers, Del. You and me for the next week or so. How will we cope? I don't know.
Oh, lovely. Thank you, Ryan. Thank you, Kay. Enjoy your holidays, and we'll see you all tomorrow.
We'll see you tomorrow. Yeah, cheers, guys and girls.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.